All right. YouTube audience, Wednesday, August 14th. If you put music to this chart, it wouldn't be in rhythm. You'd have a bunch of teenagers in a garage making noise, especially in the first hour. A little bit more downside rhythm about maybe in the last 45 minutes and a decent bounce in the last 20 minutes. But this first hour created a tease. And when it's faster, like it's volatile today, right? But not like a couple weeks ago, volatile. It was a little easier in breakout and less of a fake. A lot of fakes in the first hour with volatility. So it's not a chop where you could still control your risks if you're getting chopped up. Getting chopped up in the first hour of today's session, you got a big red or bigger red than normal downside. And it's a lot of wood to chop. Now, the whole thing right after 8:30 Central, you had to know the drivers of the fact the 210 yield curve inverted. You got weak data coming out of Europe. They're sick and tired of the U.S.-China trade deal just being talk. This is now the third time. You got to know that they took away the entire rally from yesterday and where that was. 79 even was important until it wasn't, meaning that's where we started that big rally yesterday. But knowing all this stuff, knowing that we're weak was all important. But there were so many head fakes. We're going to go down. No, we're not. We're going to go up. No, we're not. We're going to go down. No. Up through here, not so fast. Lower high. All right, we're down. Sell retracements. Too bad. Shakeout city. Should be bullish and take out these swing highs. No, not going to happen, right? This is hard to read. Don't beat yourself up if you had trouble reading it. Now, there was kind of a strategy as you've been trading long enough, you think about or you start to implement, and that is when you're having trouble reading it, you look at you figure on your anxiety. And you're like, I'm anxious to get short, let's just say in this area. It has nothing to do with this chart. Just look inside this box. You could feel yourself being anxious to get short based on the stuff that you see. And it could be the good stuff, meaning it could be the right stuff that you're looking for to get short. And so you're anxious. You're seeing price move. You're seeing everything happen. And so you're anxious to get short. You got to be willing to miss it because you need to say, if I get short in this rectangle, I'll puke it here for a loser. But you know what? I'm not going to take the short in this rectangle. I'm willing to miss it if it goes straight down, but I'm going to get in where I would have got out. This ain't a science. It's just, hey, I'm anxious to get in here the way this market is. If I puke it here on a normal day, I'm going to actually try to just wait for it to come in and get short in here and limit my risk. Now, if it goes down, that's fine. I missed the winner. No problem. It'll help save from too many trades in a market that's hard to read. Early on, you had to know it was hard to read in the first 5 or 10 minutes. One of the ways you know it's hard to read, number one, is you're expecting some volatility, and you should know that. Huge volume, almost 500,000 before we opened. We had a huge range. You know the drivers, everything else. So you're expecting a move. But when you get fake outs like this, and that's in the first 5 minutes, you know it might be difficult to read. You got to cut your size, number one. Number two, another tell that it's going to be tough to read is winners that you don't take turn to losers. Happened to me a couple times. Small winners that I'm thinking, I'm not going to take a 5 or 6 tick winner with a head start when we're down 50 handles on the day. And then wham, it's a 2-point loser. And so you're getting chopped up. You're keeping your head around above water, a little below water. And then 1 or 2 of those happen. Maybe you're down a little bit more than you want. You come back. At some point, you got to say, I have to implement this instead of getting short here. If I want to get short, I'm going to get short where I would have got out because it's tougher to read and it's slipping a little bit more. Not just because of the volatility. It's just tougher to read today. And I think the expectations for a straight move lower because we had a straight move higher or a bounce because of the sell-off in the overnight session didn't happen. So you just had a cluster of a lot of different people that were getting stuck. A lot of fires in the banquet hall. Each room in a banquet hall has people who are long, people who are short. Someone throws in something, yells fire, people running from one room to room. That was happening a lot in this first hour, without question. So you got to make sure that on a day like today, you have high expectations. You got to rein them in really quick, or a semi bad day could turn into a real bad day. We're always trained to come back tomorrow. Come back the next trade, but come back tomorrow. You could be mad, but not so mad where you got to take tomorrow off, or so mad that you can't go over what the hell you did. Sometimes that'll happen. But you can't add to losers, and you can't be surprised when winners turn into losers and think, well, I had a 6-tick head start, and now it's 4 ticks against me, but because I had a 6-tick head start, it'll come back. No, not the case. One other piece of advice I could give you is on the lows, if you're bottom feeding, I was talking about this earlier, you got to find not an easy chance to get long, because everybody will get long there when you're bottom feeding and trying to fade it. You got to find moments where, hey, you know what? A lot of people didn't catch it down in here, so it has the best chance to rally a little bit. And it's not after the fact. It's like it quickly came out of the hole. And if you bought it here and quickly got paid, others probably didn't have a chance to get long. And if there's not a lot of bottom feeders and longs, there's not a lot of sellers, easier chance to go up. And it has, to the tune of about 9 or 10 points. With that being said, and I don't say this a lot, but close your eyes and we're down to 28.40 in this S&P. Don't let that surprise you. 210 yield curve is being talked about a lot. It's a recession predictor at times, and they're sick and tired of all the optimism that'll come out of U.S. and China as far as, okay, we are going to meet again. We're going to defer tariffs. G20 meeting late December, G20 meeting a couple months ago. Everything is, yeah, we're optimism. This economy is global, and this economy doesn't know how to price in uncertainty with a trade war. I've been trading and in this business for almost 25 years. Trade war, in all the drivers we've been through, hadn't been one of them. So for a quarter of a century, this market, two biggest economies fighting over trade, this market at this point forward will not react positively unless you get signatures on a piece of paper.